Edward Yardeni is with us, President Yardeni Research. So we'll get to all of the domestic plays, but let's get that global view from Edward Yardeni first up. Great to have you, Dr. Yardeni, as always.
Thank you.
The jobs data, do you think there's a presumptive celebration there on the street? Because you saw the private roles and ADP data come in before, which was not that hot. There's so many things which are in between. There's no finality yet. Do you think it's too early to sort of say the worst is behind us in terms of these two crises, one on the US economy and one on trade?
The way I look at it is any data that supports my outlook is good data, and any data that doesn't support my outlook is not so good. All in all, I'm not a big fan of the ADP data. I think the official data is better. It tracks better with the economy. And it does indicate that the economy is resilient, which has been my thesis, is that the economy put up with the Fed tightening monetary policy quite well over the past 3 years. And now I think its resilience is being stress tested by Trump's tariff turmoil. And so far, so good. The economy is hanging in there. The labor market's doing well. Consumers have jobs. They continue to spend. And even capital spending is holding up quite well. So no wonder the stock market is, within striking distance. Could happen the next day or two. We'll be at a new record high in the S&P 500.
Dr. Yardeni, very good morning. I'm just wondering, and so I want to know how much attention you pay to everything that's going on in the White House, or shall we say actually outside the White House right? So I'm specifically asking about Donald Trump and Elon Musk, and the splitting apart of what a lot of people were seeing as the dream team, and it's pretty quick. It's not taken too long. So what are the implications from an administrative standpoint for them to be able to push through a lot of the things that they promised that they would?
Yeah. Well, first, let me say that I've been doing this for over 45 years. And what I've observed over the years is that's amazing how well the U.S. economy and the U.S. stock market have done and can do despite Washington. In other words, I think we spend way too much time on Washington and not recognize that the economy has its own dynamics. But to answer your question, it could get messy, obviously, if Musk decides to fund a new party. I don't think that's going to happen. I think a lot of this is just one ego against another ego. And I won't be surprised if a month or two from now they're shaking hands and all is forgiven. So I would say this is mostly noise. I don't think this is going to affect the big, beautiful bill. I think something is going to be put together to extend the tax cuts that we had in 2017. But that's all it's going to do. It's not going to be a new stimulus. It's just going to keep the economy from falling off a cliff if suddenly there's a big tax increase.
Dr. Yardeni, good evening. The US-China talks today, export controls on advanced technologies, maybe rare earth ban, what have you, so much in the offing. You reckon the market should anticipate some constructive moves here, or could this be just the first meet and some more decisions later on?
Well, it's hard to say, but I think China and the United States are going to recognize that they are more dependent on each other than they actually thought. I think the Chinese always knew that they're dependent on U.S. consumers to do a lot of buying in China, to import a lot from China. I think the United States turned out to be pretty naive when it comes to essential rare earth minerals. We knew this a couple of years ago that China had a monopoly on rare earth minerals, and yet we didn't do anything at all to find alternative sources. So I would say that both sides, it's in both sides' economic interest to work out some deal where we get what the access we had to the rare earth minerals, and that we ease off on the tariffs on the Chinese imports of particularly consumer goods.
Dr. Yardeni, just a quick view on India. We had the monetary policy on Friday, which we were talking about just before we spoke to you, and a 50 basis points cut by the Reserve Bank of India and a cash reserve ratio cut to infuse liquidity over the course of the rest of the year was not anticipated. A lot of people were anticipating a 25 basis point cut. And so from that perspective, I don't know how closely you study the Indian markets or the Indian economy. that's expected to be a shot in the arm. So is that something that you're looking at as a potential for investments or your peers, for example?
Yeah, well, as you said, this was really unanticipated. It seems to be more than the Indian economy needs. It seems to be more than the stock market needs. The stock market has had a nice rebound, but as you said, it is going to be additionally stimulative here. Perhaps the government was thinking that some of this tariff turmoil was going to create some problems for India, but from what I understand from all the discussions out there, it seems that one of the deals that will be accomplished pretty quickly here is between the United States and India. So it's a head scratcher. It's not clear why the government did it, but they did do it, and it's a positive for the economy and for the stock market.
Thanks so much, Dr. Yardeni, for joining us this morning. Always a pleasure.
Thank you.